Good morning. This is Marie Gibson with Gibson and Associates, managerial consultant, and I help busy business owners take charge, create, fine-tune, troubleshoot their accounting systems when they're using the QuickBooks software. And there is a previous video on YouTube showing some basic conversation about inventory and inventory adjustments. This is another step, another conversation that came up with a business owner that I wanted to share with you all. So I'm going to give you an example. I'm going to be sharing my screen with you this morning and taking you through a little additional conversation about this. And so you should be able to see my screen at this point in time. I actually going to just double check that. Oh, nope. So that's not the one we want to see. Let me stop that sharing and share again. And let's just share the whole page, the whole monitor with you. Okay. So when we're looking at adjusting inventory, the CPA often gets involved. It becomes a strategic conversation. If you've been running negative inventory, negative count, negative value in your inventory for a number of years, at some point in time, it affects your cost of goods sold. So we discussed that in our previous video, is that at this point in time, your cost of goods sold here, which is either your purchases or your inventory as it's sold, your cost of goods that you are selling, is affected. And if you affect this cost of goods sold, you ultimately affect the profit at the end of the day or at the end of the year, and then you would pay more or less taxes based on that. So at some point in time, if you recognize that your inventory is wonky, and we'll pretend that wonky is a technical accounting term, becomes used quite frequently, but we realize that something's out of whack, that our inventory is not correct, our inventory valuation on our balance sheet is incorrect, our cost of goods numbers are either too high or too low, or there's negatives and they're running rampant. We just have to bite the bullet and fix that. Now, the fixing of it is a strategic decision to make with your tax preparer and your tax accountant. So this is in no way construed as tax advice. It's literally a point and click to help you understand how you would do that and how you would document that process for your accountant. Because you may be wanting to strategically move that increase or decrease of your inventory back into last year and refile your tax returns. You may just do it this year. You may decide to wait if we're towards the end of the year and do it next year. Those are conversations that you have in confidentiality with your accountant so you can prepare for this. Let's see how that we would actually document it. So if we're in here and we're looking at, I pulled up an inventory valuation summary. And this inventory valuation summary is as a specific date. And those reports are under reports, and then inventory reports, inventory valuation summary. You can do a detail, but a detail is like multi-lines and it's going to make your life miserable. But the summary should be fine as documentation for your CPA. You'll have to check with them. So when you do this, you can actually change the date. So we could say, as of August, as of May, as of whatever date, we have this valuation summary. I can save the report as PDF. It's not particularly valuable at that point in time. You may like it, your CPA may like it. I like to export it, and we would export it into an Excel file. And at that point in time, I have the quantity on hand as of that particular date. I have the cost, that's the cost that's given to me in the QuickBooks program, and then the value. And ultimately, I can sum up the value for the CPA. So as of this date, my inventory is valued as of this. After I make the adjustments, I would pull up the same report and also create a second report saying, this report is dated 3 months later after I've made my adjustments, or a month later, or a week later. Once you've made your adjustments, you'll be able to see the difference in that valuation. So that report is very helpful in this process. What I really like to do is to create a special account to track those adjustments. And I mentioned this in the previous video. So again, if this is the first one you're watching, you may want to go back and watch that prior video. there is a choice here. We can actually just affect our count because we know our costs are correct. Sometimes that's accurate assumptions, sometimes that's not. What I have found is that usually if your count is incorrect, sometimes your cost is incorrect, or you've had no cost entered at all for a number of years. So I like to go ahead and adjust the quantity and the cost. You can, again, pick the date. So today we would pick August, or we'd pick September 1st, or we'd pick January 1st, or December 31st. But we want to pick a specific date so that we can document the changes that we're doing to provide that information. It's a paper trail, and we're providing that to our formal accountant who's creating the tax returns for our benefit. What we like to do, or what I have found is very beneficial, is that instead of just coming in here and making these adjustments to our normal, and it'll give you a little message, that would be our normal cost of goods. It's our purchases, it's our inventory that we're buying. I don't like posting it there. I find that I need a separate account, and so you need admin rights to actually create a new account. And when we create a new account, we're going to create a cost of goods account. And I like calling it inventory adjustments account. And what happens is when we're creating this inventory adjustments account, all of these offsetting entries, whether you have too much and you're reducing your inventory, you have too little and you're increasing your inventory, all of the adjustments that are happening down here in these inventory parts, whether we're increasing, well, gee, we actually have 5 of those. And let's say that each, it tells me that this 6, I'm reducing that by 1, and my new value is 75. I can, at this point in time, change the value, the cost, at this point in time moving forward. It doesn't change the historical cost of that inventory. So again, that's why we want to document the dates that we're doing this. So let's say that those 6 on hand, I now have 5 on hand. Those 5 on hand truly are $10 a piece. I don't know where the other number came from. This $50 tells me that 5 of them are $10 a piece. That makes sense. But what happens is then I have an adjustment in my inventory down in the lower right-hand corner. It says the total value of the adjustments, $40. That is the adjustment number that the accountant, the CPA, is looking for. And that's why when we actually have a separate place to put it, he can easily print that register. He can actually see the changes that you're making. He knows the documentation and feels comfortable then helping you strategize when the best time is to make it. So anyway, we can save and close this. We'll see that adjustment. It actually would happen in this report as well if there are dates, and I wasn't paying any attention to the dates, but if the dates are correct, it will ultimately reflect here under cost of goods sold, inventory adjustments. And if you don't like it at the top, and then remember, this is basic QuickBooks. Whenever you create a new account, it floats to the top of the type of account. So I can step into my chart of accounts and I can say, you know, I really don't want inventory adjustments way up there. Let me bring it down here where it belongs. And then when I reformat the report, I can see that inventory adjustment, that cost, $40, it's actually going to then reduce my profit in that capacity. Some of your adjustments will be the other direction. And if you keep this separate account, sometimes your increases and sometimes your decreases will offset each other, and the net difference is minimal. And sometimes it's a large amount. It just depends. And again, if we keep it separate and we don't bury it inside your other cost numbers, then you're able to track it easier. So I'm glad to help you with this issue, and I look forward to talking with you later.